American Depository Receipts, or ADRs, allow traders and investors to make buy and sell decisions about non-U.S. company stocks denominated in U.S. dollars and offered on a U.S. exchange or over the counter. For example, did you know that you can buy shares of a German company such as Siemens, Bayer, or BMW and not have to pay for them in euros or on Germany's Frankfurt Stock Exchange or other foreign venue? In fact, according to the U.S. Securities and Exchange Commission, traders and investors can select from more than 2,000 ADRs, representing shares of companies located in over 70 countries. In this course, we'll explore more about what an ADR is and how they are different from a U.S. company's equity, as well as certain of their characteristics and some of the benefits and risks that market participants may enjoy or encounter when deciding to purchase them. So let's begin by describing in a bit more detail what an ADR is. An ADR is a certificate issued by a U.S. depository bank that enables foreign equities to be traded on U.S. stock exchanges like the New York Stock Exchange or NASDAQ. While the term is sometimes used interchangeably with American Depository Shares or ADS, it is important to note that they are not synonymous. You want to remember that an ADS refers to the US dollar-denominated equity share of a foreign-based company, while an ADR represents one or typically several ADSs. Like exchange-traded funds, ADRs look and trade almost the same as US stocks. They may be US exchange-listed or over-the-counter and trade during US trading hours. But there are several features that differentiate these products. For example, ADRs generally face foreign currency risks as well as different tax treatments compared with US-based stocks. We'll touch on these concepts a bit later in this course, but for now, it's important to note that when you own an ADR, you essentially hold exposure to the non-US equity it represents. If, for instance, I buy 200 ADSs of BMW, I would own 200 shares of the foreign entity BMW, which are subject to the same shareholder rules set forth by BMW in Germany, as well as the local currency in which it's denominated in its home market, in this case, euros. Now, not all ADRs are alike. Not only are the foreign companies they represent different, but the products themselves come with their own defining characteristics. For example, they may be sponsored or unsponsored, and be offered with a certain classification level. Let's first take a look at what sponsorship entails. A sponsored ADR generally means that the non-US company has elected to work with a US depository bank which provides a number of services, which may include creating the ADR, handling record keeping, serving as a liaison to shareholders, and paying out dividends, among other functions. By contrast, an unsponsored ADR may be created by a US depository bank without the cooperation, participation, or even the consent of the non-US company. These forms of ADRs are only traded over the counter, are often illiquid, and may only provide financial information and other forms of communication in languages other than English. However, all ADRs must be registered with the SEC despite whether they are sponsored or unsponsored, with the type of registration dependent on the ADR's level, which are classified as levels 1 to 3. But some of the major differences are that level 1 ADRs are only traded over the counter and listed in pink sheets. These may be highly speculative investments and not appropriate for those that are risk averse. Level 2 ADRs are listed and traded on a US exchange and are somewhat more liquid than Level 1. Meanwhile, the top level, or Level 3 ADRs, are also listed and traded on a US exchange, but they're required to meet stricter reporting rules than the other two. And also, unlike the other two, they can be used to raise capital. Now that we've covered in some greater detail what ADRs are, along with certain of their characteristics, we'll next dive a bit deeper into some of the benefits and risks investors may encounter when deciding to trade these products.